Rohr here with an early global view on Tuesday, March 31st, 2015. It's currently 7:15 a.m. U.S. Central Time. Coming to you a bit later because we want to get closer to the U.S. equities opening, which is interesting on a somewhat lower opening today after the big surge up yesterday. We'll get back to that momentarily. But also we have to, view the degree to which there's a mix of weak and strong data. And interestingly enough, the weaker data is, with some exceptions, tending to come out of the U.S. now, whereas European and UK data is finally improving a bit, which is helping all the equities to some degree. And those better indicators we discussed, across the board on the foreign data this morning, really isn't helping the equities very much. The S&P future is off 11 at 2,065 at present. And of course, this just points up the degree to which the immediate data doesn't always drive the market. And we think this has something to do with the geopolitical stresses and general concerns about background weakness in the economy, regardless of some better numbers here and there. And we'll know more after the numbers today. But for right now, even though this is a global view, it can be pretty concise because a lot of these markets are playing around with levels we've discussed at length before. So for instance, here we have the hourly June S&P future on the left, 30-minute on the right, and we had the key levels are about 2060 to 58, 2040 to 36, and on the upside, 2075 to 78, this side of the old December high up at 2088.70. So we can see how the market has worked around those numbers. And yesterday, with the sharp gap higher, what we had is a push above the 2075 to 78 area, but the market settled down later in the day and closed back toward the low end of that range. So once it's going to be lower at all today, it's not surprising to see it back under pressure. We do have a gap now as well with yesterday's low up at about 2065, and early today, through the course of the first hour, into the second hour, we've got the channel support up from the sharp gap lower on Thursday that ranged well into the 2040 to 37 area, 36 area. After actually trading below it electronically overnight, this had been down at 2033 that morning prior to U.S. regular trading hours. So it looks like a trading affair to us, and we'll have to see if it gets back below 2060 to 58. If it does, our suspicion is you'll be back down testing 2040 to 36. If not, you can probably rebound for another test of 78 to 75. And that pretty much does it for the short-term view of the S&P 500.